Ladies and gentlemen, welcome to the Market Monitor Show. In today's show, we have red markets. Nebius down 7.8%. The triple Qs, the NASDAQ 100 down 2.2%. The S&P 500 down 1.6%. SOFI down 12%. SOFI is down 12%, ladies and gentlemen. Unreal. If you guys are looking for dips to buy, who knows? Today might be the day. It might be a week from now. This might be the start of pain. What you're going to see is that a lot of these lenders that benefit from rates coming down are going to see hits today. Lending Club down 5.5%, Pagaya down 12%, SoFi down 12%, Tesla down 7.6%, under $400 a share. Bitmine down 10%, $36. Maybe this is just the beginning, though, eh? Who knows? What we do know is it's a crap day, and as a long-term believer in markets, I remain to hold. I actually did end up trimming a name today to buy something else because it was a lot more dippy. Maybe I'll say it tonight. I did already tell a case of, people on Discord and stuff. So you could definitely find it, but maybe I'll just keep that to myself. But extremely ugly day. It was not BMNR. It was a new position. Okay. That being said, let's talk about why and if there are some potential catalysts. Okay. First up, the U.S. Economic data for October is quote unquote delayed and also may never be released. This obviously is going to fuel a lot of different conspiracy theories as to how terrible the numbers might be. And so people are starting to reconsider whether or not there is even going to be a rate cut in December at all. Obviously, after Jerome Powell's comments from the last October meeting, the FOMC, that, he made it quite clear that it is not a foregone conclusion that, there's going to be a rate cut. But there was still roughly a 70% chance that economists were putting on saying that there was going to be a 25 basis point cut. That, wrong slide, give me one sec. That can no longer be stated. After today's lack of CPI report, that no chance of a rate cut is now at 52.4%. The majority is now saying we are not going to see a 25 basis point cut, only a 47.6% chance that we see any rate cut at all. Remember, comments from Anthony Noto that just recently came out said, hey, we're going to go gangbusters if we continue to see rate cuts. Doesn't mean that they're going to see a lack of growth. I mean, they still will grow. It just won't be as hot of a loan platform business. There won't be as much demand for an environment where we constantly see these 25 basis point cuts. So speculation for SoFi's growth going forward ends up getting hit because there might be a slowdown in the amount of loan purchases. Okay. Or even if no data equals no Fed cut, does this mean no Santa Claus rally? I don't know if it's that bad. I think, the market doesn't like uncertainty. And as time goes on, maybe some of that certainty will be put to rest, or some of that uncertainty will be put to rest. We'll actually get some clarifying data. But in the meantime, people are speculating, obviously, the worst. So this is the sort of thing that I want to highlight, is that if you want those huge rewards, you obviously are taking on huge risk. If you don't want your stocks to go down, don't hold stocks, hold cash, okay? Your cash won't go down, even though it is going down in terms of real money and real spending power. At least the number doesn't look like it's going down. For the stocks that you hold, for all the times that we end up seeing year-to-date performances that are above 100%, you are going to have these days where you end up seeing double-digit downsides, right? That's just, it has to happen. And people speculate the worst, but it doesn't necessarily mean just yet that the worst is even happening. It's just speculation of the worst happening. And funnily enough, usually whenever we actually do see the worst happening, the performance on stocks is actually not as bad as uncertainty. The markets are okay with good data. The markets are okay with bad data. They hate uncertainty. So the fact that no data gets released, it just allows people to speculate however that they may speculate. Right? As Mohammed put it, let's bring this up really quick. The United States administration's decision to not release the October CPI and jobs report is virtually guaranteed to fuel conspiracy theories. You may wish to remember three things in considering them. The schedule. These reports were scheduled for release in in the few days based on data collected even before that. The distribution. The government shutdown derailed the data collection process and the accuracy. Trying to catch up on data collection is not just technically tricky, it also may be relatively inaccurate. So people are going to speculate. Speculation. But that also allows you to buy into SOFI at a $4. We used to buy SOFI at $4, and now in a 2-day period or in a 24-hour period, you could have purchased this company at $32.70 or $28.30. It's absolutely crazy. So in some ways, if you're a long-term holder, enjoy these dip purchases, enjoy the volatility. It doesn't feel good. It doesn't look good on the markets. If you guys are worried, close your portfolio and go outside. It's just a matter of, hey, time to step away if you're panicking, or if you knew that you were potentially taking bets that are not sound investments. These are not quality names, but yet they're being propped up by the market that we're in. I'm not going to say the industries that I'm thinking, but there are some industries that do not bring on even revenue at this point, yet the PEs and multiples on these businesses are hundreds, thousands, sometimes like tens of thousands of PE because they're not bringing on, they might bring on a tad bit of profitability. Maybe roll out of those names. Maybe look to buy quality names that are growing over time regardless of macro condition. That's also why, a Palantir is so sound here, being one of the most, expensive names in the market. And yet a 7% drop in this name is still $171. Okay. The PE on this name is hovering around 400 times. But yet, and I'm not being sarcastic here, this is a very sound business, right? Whether or not that the government or that, data is going to come in hot or cold, or if there's a ton of layoffs, or if we're in a good environment or a bad environment, people are going to continuously use more and more of Palantir's product because it's more accurate, more cost saving, better for business, better for the government. So look for quality names. Not saying that you can't get Palantir here at a better price. If you can find some quality names that also have good valuations, well, then that might be the best bet. Look to, potentially Amazon or Google, or even interestingly, Meta, hovering around $600, but yet barely even selling off today because over the last little bit, they have gone from $760, and they sort of front run this bad data. It actually shows you how resilient this $600 support is that even on some of the worst days, people are saying, okay, well, we'll sell off some of these names that have already ran. Nebius taking a massive hit. What's it called? CoreWeave, also down 9.3%, but we're not going to sell off all of the AI names. It's not like Meta isn't making $50 billion a quarter. They are, and we're not even talking about Q4 here. So there is some, not rotation, it's still down, but there is definitely a rotation. You see some sectors doing well. Let's take a look here. drug manufacturers, insurance, telecom services, oil and gas. A lot of very defensive names are doing well. Semiconductors down 4.5%. Jeez. Nvidia down 4.7. I did make some trades today. Should I tell you guys? Should I tell you? Obviously, you'll all say yes. It's just quite interesting, the move that I made, because I don't think many people will think that I had made this move. Okay, I'll just say it. I already told it this morning, but if you were in a Mitts chat, we were talking about it as well. I ended up trimming some Nvidia to buy Nebius, just essentially staying in the exact same sector, and opening up a new position, taking advantage of a very fast-moving name that is selling off due to worries, and I am not worried at all. A very small position, okay? I have a huge, as a percentage of my portfolio, Nvidia is a huge position for me, okay? Staying in the same sector, but just taking advantage. I think at the time, Nvidia was 188, 189, something like this. It was down roughly 3%, and Nebius at the time was down like 8+%, after having dipped aggressively over the last couple days. But yeah, before earnings, yes, that's correct. I like I said, I'm confident that or I'm very confident in Nvidia, and I promise you guys, if you guys are worried about that trim or whatever, it's not as big of a trim as what you guys are thinking. I just don't have cash, so I had to pull it from somewhere. So do I pull it from Hood or SOFI or any of these names that are also down massive percentages today? Or do I rotate it out of one? I almost just did the same name or same sector and taking out of a bigger name, putting it into a smaller name that is also going to see, some relative success in the market, probably outperforming Nvidia in the, midterm here. Okay. If Nvidia does well, Nebius will do well with leverage. No, exactly. I completely agree. I actually think that Nebius will do well on Nvidia's report, right? Like they're not separated. SoFi's heading south again. Let's take a look here. SoFi down 12.5%. Look at this freaking day. 28.20. We just recently touched 28.15. In the last 5 days, we got to, is that crazy? In the last 4 trading days, we were at 25.87 in the last, 5 trading days. This day looks unbelievably crazy, but the markets are so volatile right now that in one day we can break an all-time high, 32.73, and then just lose all of those gains the next day because a report was not actually disclosed. That is nuts. Like usual, my opinions on BM&R have not changed. For example, actually, there was some news on Cash App. Let's bring this forward really quick. Cash App is now going to allow, by the way, Jack Dorsey is a Bitcoin maximalist. They are now allowing for stable coins as payments on Cash App as well. That opens up even more payments and potential use cases for stable coins to another 58 million monthly active users. I'm trying to find, I thought I saved a little slide here. So overall, I haven't changed my stance on Ethereum, and Ethereum, like BMNR to me is just Ethereum, right? I don't look at BMNR's outperformance of Ethereum right now. Not while, it's sinking. It's just a matter of what are their costs to operate this treasury? Practically non-existent. And if there ever was a cost, it wouldn't succeed the 3% stake of you just staking that Bitcoin. So if they fall below MNAV, which I'm pretty sure they are right now, I haven't done the calculation, but just based on, the recent falls in Ethereum, you're probably actually buying BMNR at a discount to what they actually have on their balance sheet, which is likely that they might slow down buying Ethereum to then buy back more shares. Because what's funny is if you can go out to the market and buy Ethereum, or BMNR can buy with their cash what is worth, like buying back shares at below MNAV is actually getting a premium on Ethereum, if that makes sense. It's quite interesting. So if they fall below MNAV, you'll likely start to see them buy back stock. Let's quickly look at, I freaking hate that Grayscale Ethereum Trust shows up on my chart before Ethereum does. Big sell-off on Ethereum and Bitcoin. It fell below 100,000 and now it's below 98,000. Sorry, 99,000. That is incredible. I mean, incredibly painful. It's not a good thing. But let's quickly take a look at coin market cap really quickly and see how things are feeling. Right now, fear and greed on coin market cap is at a 25. And we are shaving off the entire crypto market now at 3.3 trillion, down 2.74%. That is incredible. Coin market cap 20 is down 3%. Look at this bleed. Last 7-day percentage on Ethereum down 4%, but in the last 24 hours down 5.8%. Even Tether is down, guys. This is how bad things are. This stable coin is down. It's not how it should work here, okay? We're just breaking systems. There is a lot of people being liquidated in crypto markets right now. That is true. I think I read, what was the 24-hour liquidation? Let's see. 200 million in the last hour. $200 million in the last hour. That is crazy, ladies and gentlemen. I don't think Trump will allow this. Yeah, he just needs to say bye, and then it's all going to turn around. Yeah. Your Black Friday sales are coming early. Honestly, though, people do not think about stocks enough like this, right? You're buying companies at the end of the day. If you're buying expensive names, then like you're paying a premium for the same business as whenever you're buying them today, and they're down, huge percentages. Do you think that obviously this changes the perspective for some businesses? If you see a Robinhood or something like this, if you see Hood, let's take a look here. Oh, my spelling is bad. Take a look at the minute chart really quick. Hood's business is fundamentally impacted by the market seeing red here. If people start to worry, if people say, okay, you know what? I've been doing a lot of leaps and I've been doing 0 DTEs, and today my account just got liquidated, and Wall Street Bets is going to be filled with them tomorrow. That those people are done playing on Robinhood's platform. Okay. That can fundamentally impact Robinhood's user base. Maybe there will be even more dip buying. Who knows? but we've seen a couple of these days, and retail does get exhausted. Okay. There's a little bit of fatigue whenever companies are red for long periods of time. So if we don't see an immediate V-shaped recovery, there's some people that say, hey, you know what? This buy the dip game is not working. Okay. So that can be very real. This company can be impacted. If we do not get a rate cut, companies like Upstart and SOFI and other lenders can also be very impacted by these types of decisions. I'm curious to you guys, or to ask you guys, if you think that the Reddit users, the Facebook users, the Instagram users are going to be watching less reels because CPI data did not get released. Do you think that this stops the Santa Claus Christmas spending spree for Halloween or for oh gosh. Yeah, man, this is where live streaming becomes a disaster. If I was recording right now, that gets completely cut. We forget about it. I take a sip of my water, start again. That's recorded forever. What a jumble of nonsense. Do you think that people are going to spend less because the October CPI report did not come out? There we go. Had to take a breath. Let's start again. That said, Verizon got quite the report here today, which could end up impacting, actual spend during the holiday season, and that is cutting people's jobs. Roughly 15% of their entire employee base is not going to have as great of a holiday season this year. It sucks. You know what's crazy is that the stock is up 1.5% on this news. The entire market's down. Verizon, gave the Christmas gift of telling, wives and husbands and stuff like this that they have to go home to their family and say, hey, honey, I lost my job. So that can impact, some of the spend, but it happens. It does happen, happens all the time. There's also other companies that are having hiring sprees right now. So that it is unfortunate, but it does happen. Dookie's in chat saying, I told you guys. I mean, you did. She was saying this was not going to be good. And she was talking to some of the higher ups of the world, some of the elites, saying, hey, guys, there's going to be... I forgot my crystal ball. My crystal ball doesn't work anymore. So I don't, invest that way. I'm just buying. And whenever I see things that dip, I buy more. Call me, a simpleton or something, but that's the way I like to do things. Yeah, the elite. Okay. I've been building a cash position. When do we start deploying? Don't talk to me. I've got no cash. I had to trim NVIDIA to buy dips today. Okay, so don't ask me. I don't know. And you know what? Honestly, I'm not worried at all. To be completely frank with you guys, I can put the red backgrounds or whatever, and obviously there is a lot of pain, but if you guys know that the way that I trade, none of the things that I'm doing are, in fact, the small amount of short-term trades that I do have in terms of covered calls and stuff are benefited from days like today. So I buy for the extremely long term, and I make a little additional profits while doing covered calls while things are up. Okay. Also, someone just said that SoFi stock is down 1% on the week. Well, actually, on the last 5 days, we're still up 4.9%, which is kind of crazy. It doesn't feel good to have a day down 11.5%, but sometimes we have to put this into perspective. Year to date, it looked a lot better yesterday, but we are still up 90%. Isn't it crazy? You could have bought SoFi in 2025 at $8.60. Who could have thought of that? I could tell you more, but you don't listen. Dookie, you don't email me. How am I supposed to know? Are you streaming news earnings? Yes, but it's not going to be at the same time that we usually do our earnings calls. Nubank's earnings are quite interesting. They end up going through the entire slide deck and showing off all of the numbers and how, they think about each number. So I am not going to go through, tell you guys all the numbers and then watch the call because they're going to do it anyway. So that means we're probably going to start streaming somewhere around, I don't know, 4:45, something like this, and then let the call actually do a lot of the explaining, not 3:45. So I'll be much later today. But yeah, it'll still be good. When in doubt, zoom out. It is true. It is true. We have to look at the grand scheme of things. And for me, whenever I am looking at, a massively red day today, it's to buy, not to sell. Bulls make money, bears make money, pigs get slaughtered. I'm not here to be the pig, okay? If you tell me what's actually gone wrong, then and if then I'll start to be concerned. But if we're saying, hey, you know what, the American financial institution's no longer working, I don't believe you. So I continue to bet very long on these stocks that I do not think are overvalued. Historically, you can look to some metrics and say, hey, you know what? They're like the Schiller PE of the S&P 500 or something like this and say, hey, you know what? We're historically pretty high. Maybe this is going to be sort of a broad-based sell-off for many, many weeks or many months to bring down those valuations to more appropriate levels. But then I have to take a look at the businesses that are holding up, these valuations. NVIDIA is essentially saying that the market that they are growing in is going to continue to grow between 40%, which is what AMD just said, and NVIDIA saying 50% for data center total addressable markets for essentially the next 5 to 10 more years. During that period, NVIDIA is hopefully hoping to keep that market share. So essentially saying that they're going to grow between 40 to 50% year over year growth rates for many years to come. Well, if that does even remotely happen, would put them as the most profitable business and put their stake in the S&P 500 very closely aligned to their stake in total profit. So if you look at NVIDIA's share of the S&P 500, I think they make up for 8% right now. Let's take a look. They make up for 8.3%. And then if you go ahead and you take a look at the actual net income of the S&P 500, they also make up roughly about 8.3%. I think before, because we don't have updated numbers for NVIDIA, obviously they were going to grow from Q3, well, different for fiscal year, but traditionally Q3 of 2024 to Q3 of 2025, they're going to make more money, right? So are we heavily concentrated in a few names, or are those the names making all of the profits while still growing at 20+% rates? That's extremely high to grow for a Meta and NVIDIA and Microsoft, Google, Apple not growing at like the same, but even Microsoft doing extremely, extremely well. Same with Google. I'm not here to pick favorites, but yeah. It's pretty simple. Institutions that missed out joining retail on April dips are creating fear and panic in the markets to create low lows to make all that money back that they missed out on. I'm okay with that. Create fear. I honestly, what has allowed me to win in markets, if you want to call it that, is iron stomach. Okay. Remaining extremely confident. The US wins. They have the printing press. It's hard not to win whenever you are creating the game and the rules that we're playing in. So if we also remain at the top of the tech industry, those companies are growing at quick rates and they continue to bet on the future and not being complacent, which is actually what the market's getting mad at them for doing, is spending for artificial intelligence. I've got zero problems with that. I continue to be a big bull in those types of markets. The bull market that we've ended up seeing from if you want to say from 2022 to 2023 till now, is not very long. Bull markets on average last, 7 years. Last big one was actually the longest, roughly 12 years. We're still pretty early. And if you go back to 2008 and you end up looking at 2009, 2010, whenever things were really, really red, you would think, oh, everyone's turning bullish now. It wasn't the case. There were articles coming out constantly in 2010, 11, 12, 13, 14, 15, 16, the whole way along saying, guys, now's the time to panic. And there were certain blips where people said, oh, this report didn't look as good. If this trend continues, things are going to get bloody red. And all during that case, companies continued to improve profits and margins, and stocks continued to climb. So I still do think it is a bull market, and that this does not mean because we have a blip of red due to an October CPI report being missed, or Epstein files or something like this. That does not create market panic in my idea, or in my eyes. Maybe for a day, maybe for 3 days, but I'll need to constantly see worse reports in order for this to create something very, very large. Is the bottom in? I think the bottom being in might be a little too early to call. Obviously, we are bouncing a little bit. If we bring this up here really quickly, let's go to the triple Qs. In that same breath, I also think it might be too early to call for a bottom just because we ended up bouncing up a little bit. Okay, time to buy some stuff. I like some stuff. I don't know. Some very rich people are probably in those files. And so what? They stopped buying GPUs and Boeing planes and stuff. What are we saying? There's like a lot of, some pretty incriminating things that have happened to some people in those files, and those people still have jobs. Like, I actually don't understand it at all. So I don't think that it's going to change the way that they continue to buy and invest or something like this. They should go to jail, but I'm like, does that change markets? They're selling out to hide in Mexico. I don't think they need to sell it out to buy in Mexico. Or to sell out to go hide in Mexico. Sorry. Buy in Mexico. Sorry, Nubank's earnings are tonight. I'm just getting a little excited. That is the thing that's going to suck about Nubank's earnings, is that I think we're going to see some pretty amazing earnings today. But what happens to the stock might be completely different and not correlated to the numbers that they end up putting up. So, their quarter might be a little bit overshadowed by what's happening in the rest of the market. Yeah. Good luck to the Nubank bulls, by the way. Or if you're shorting it, bad luck to you guys. Yeah, it is a bad day to report. But, I think in the grand scheme, David Velez, the CEO, is very long-term focused as well. It's not like he's going to change the date or anything. I'm not even like, there's no alternative. But still, I don't think it affects or changes what the business means, having a little bit of pressure on the stock. We've been holding this company since sub $4. Even from going up to 15, back down to 9, like we've seen a ton of volatility. Being at $15.60 is nothing. It's like that meme where the guy has the noose around his neck and he says, "Oh, your first time?" So, Ubisoft halted an acquisition rumor. Oh, Ubisoft is halted right now. Is that what you're saying? What is BI? I don't even have it here. Oh. Is it a really weird ticker? I don't follow it. All right. Now, Dookie, now you're talking nonsense here. You can predict the exact number? Huh? What are we talking about? You said it was going to go red multiple days in a row, and then on the third attempt that you said it was going to go down, we went down. I get you. But the other days that you said it was going to go down, SOFI was up like 10% and hit all new highs. So let's not predict the exact number that you believe NVIDIA is going to, bottom out at. And honestly, 167, that doesn't even scare me. Today is very much an A- day. Yeah. Whoever said that was, we bounced off the bottom there. Maybe it's true. Dookie doubling down. All right. We'll see. NVIDIA to 0. Yeah, good luck with that, right? I think the IonQ CEO said something along the lines of by 2027, every NVIDIA chip is going to look outdated by what they have to offer. We'll see. What's IonQ doing here? Down 11%. Not doesn't change what the company is actually doing. IonZ is a 2x short position on IonQ. That's up 22% today. In the last month, it's up 133%. Isn't that crazy? Playing the short game on quantum. Not for me. I'm not buying, but I'm also not betting against. You won't catch me shorting anything. See, this is what can happen, right? One, this can be caused by just following markets way too often. Okay. I don't know, Almanac, what your companies are that you're covering, but we're at prices not seen since 5 days ago for many of these names. It's okay. We'll be okay. You tell me what companies you're holding, and then tell me what corresponded in Q3, the data that you did not like that they put up. Unless you're like, oh, my favorite company is Meta, and I don't like that they're paying their taxes. What do you like? Companies are putting up good numbers. This is uncertainty. What do we think that Peter Lynch or Warren Buffett is doing on days like today? You think everyone in the office is like running around and they're holding stacks of papers and it's going flying while they're running to their boss's desk? Like it's margin call right now. They just saw an indicator at 3 a.m. and they say, oh my gosh, you know what? October CPI data didn't come out. Like the whole world's about to end. It's all right, guys. It's 5 day ago prices. We've been buying stocks for a decade now. I'm sure a lot of you, that's just me personally. A lot of you guys have been doing this for multiple decades. But you know what? It's not that person was new. I didn't also see I'm going to comment again about the stocks that he is holding, or they are holding. But the longer this goes on, and this volatility is not leading to new highs, but we're sort of seeing this like insane volatility that's also leading to these sort of lower lows, which can happen. We've seen an amazing, amazing year. It can exhaust retail and stop them from buying into good companies, because I've even seen it with some of my own friends that are trying to get into markets, and then they like, I tell them, okay, you know what, I'm buying these extremely big names, and then they somehow work their way after investing in, quality names that I've said that, and then they end up seeing an industry or certain names that are running much faster. So then they move all their money from, I don't know, Nvidia into IREN, and then but they've already bought it 200% past where everyone just made their money. So then they freak out, and then they go and buy something even smaller to chase. Then they go and buy Cypher Mining, and then that is not working. So then they go and find another name, and then the entire broader market ends up selling off, and they just think that the game is rigged against them. Do your own due diligence. Stay calm. Buy quality names, because downturns do happen. And realize that, like, even today, even while SOFI is down 11%, more people, the regular person that's not following markets every single day, goes, oh, wow, I just saw this TV commercial about this new bank that says they're going to offer me 4 or 3.6% APY. That's so much better than what I'm getting offered at Wells Fargo. Wow, that's super cool. I'm going to sign up. And thousands of people are still signing up each day. More people are watching Instagram Reels. They're seeing advertisements. Tanner, here's some skin in the game for Stub. Thanks for the information. BMNR is killing me. Well, that's true. But also, once again, like, that is less of a quality name, much more of a speculative name. So you need to put that in your portfolio. Like, it's not even a top 10 position for me, Oh, sorry. No. BMNR might be a top 10 position for me. I was thinking of D local. BMNR might be a top 10 position for me, like 7 or 8 at this point. But, the top 3 positions in my portfolio alone make up for 70% of my portfolio. So already there, you have to split the other 14 names amongst 30% or whatever. That said, thank you so much. I will end up putting that in the community portfolio. Little StubHub only down 3%. Only down 3. SOFI trying to recover. Robinhood also saw a little bit of a bounce off of 119.47. Let's see where the broader markets are. Triple Q's down 2%. Do you ever see the NASDAQ down 2%? That is a bad day. That's just a historically bad day. Okay? So you guys are feeling the full... if anyone's new to the markets in 2024, 2025, you guys are feeling very, very volatile markets here. It's hard to go through this. But that's the game. I still have a good amount of cash, but I'm scared. I would, well, you do you. But I'm a big fan of the DCA. Buying in slowly with small bits of cash. Because the problem is that people look for lower lows, that whenever they see, markets fall down, let's take a look here instead of looking at the SPY. The S&P right now, 6,742. So then you end up seeing this over the last 3 months, and you go, okay, well, not long ago it was 65. So I'm going to buy in whenever it's 6,600, 6,500. But if this heads straight there, then you're going to feel like the fear is so high right now that you're going to say, oh my gosh, it's going to 6,200. Okay, I'm going to buy in all of my amount whenever it hits 62, or I'm going to buy in whenever it hits 6,000. And you continue to change that goalpost. And then by that point, whenever the V shape or whenever the bottom is actually in, you might not know it is. Maybe the market starts to recover 1%. You go, okay, that's a dead cat bounce. Okay, it's going to continue to fall. This is still a falling knife. I'll buy in much lower than this. But then it doesn't. Then the next day it's up 2%. Then the next day it's up 0.5%. Then the next day it continues to climb up. And then you end up missing your bottom. So I would say if you are cash heavy right now, congratulations, you've gotten a dip. I don't know when you started. Maybe you missed out on, this dip. This is why. The zoom out really does make you start to calm down and be like, ooh, I don't even know if cash is an advantage right now. But there are red days. It can get much more bloody than this. But you also don't want to miss the bottom either. What is going to happen tomorrow? I'm not I can't predict the future. This is worse than April for my portfolio. Well, then you have taken, so this happens in retail constantly. I already know what happened. As time has gone on, you have continued to shift your portfolio to riskier and riskier assets because you saw people making more money in the markets than you. Am I right or am I right? So now your portfolio is built of things that you don't think was as much quality as it was before, but they are high-flying names. If your portfolio is doing worse than it is in April, you have to think long and hard about what the heck you've just done to your portfolio. Stop chasing gains. Buy great quality names. And it's fine. And that's another thing too. This is not a game that you've made a mistake in or whatever, especially like your portfolio could be at all-time highs by next week. I'm not even suggesting that. I'm just saying if we do go into a bear market, and we all did this, last season. It's not like I didn't have positions in Peloton and skills and, crap like this. So you're constantly looking for what's the next big thing. Oh, this is going to be the next Microsoft. This is going to be the next Palantir. And they very rarely are. But I've actually changed my my scope on this probably about not even a year ago, where I just said, you know what? I am not holding enough of big tech right now. The large LLMs are winning, and I'm not even sure if the application layer on top of big AI is going to be a bigger winner than the large LLMs themselves. Do you need a presentation creating app on top of ChatGPT, or is ChatGPT just going to be able to say, hey, I'll build that presentation, you just give me whatever PDFs or whatever on top of that? You don't pay me the same monthly rate. Anyway, what I'm trying to state is that over the last maybe year or so, we've been talking a lot more on this channel about names such as Google, Amazon, NVIDIA, stuff like this. And it feels a lot more comfortable holding on to those names and Meta during these downturns. You had Peloton. I just lost a little respect for you. You don't know what it was like back then, okay? Everyone was cycling. I look at the color of my face. I don't go outside. Whenever everyone said, hey, we're just going to stay inside and cycle, I was like, that's what I've always been doing. So I didn't put I didn't put a big position into Peloton, but I'm not going to sit here and lie. I mean, I thought indoors is where people are going, okay? But no, then the lockdowns ended and everyone said, you know what, we're back to going outside. And I said, guys, wait, we're what about e-commerce? What about, I thought people loved it. I was having a great time. So, I'm a big fan of Shopify and these sort of names. And you guys, like, people can look at the chart for Shopify. During COVID, I was a happy camper. And you know what? We were holding through the whole way. Like, this was not fun. But allowed me to build bigger positions and, we'll get back there. Okay. I'm still holding Peloton? Okay, well, this is, and I don't know what's been going on with Peloton these days. I'm not sure. I can't imagine it's good. Okay. Can I give one other thing that I think about markets? It doesn't mean I'm right. It's just the way that I think about it. It is so much more beneficial for you to trim an aim, even if you're down 90%, let's say. If you think that remaining 10% is better off in a company that you have zero faith in than that 10% going into a name that you have true conviction in, you need to sell and rotate that into what you believe in now. That could be SoFi, that could be Hood, that could be Google, that could be whatever. But 15% or let's say 25% gains per year or whatever you're doing on even big tech these years is going to be way better than you constantly buying into something that just might go BK next year. It's never too late to sell. I hate the idea that people will run their portfolio, like run a position to zero and just say, I don't know what's going on with that company. They should all be in prison, but I'm just going to hold because this is pennies compared to what I was holding before. No, save those pennies, invest in what you believe in. I'm still holding Hippo. I'm going to tax loss it this year. I don't even know that name. I wasn't part of the Hippo train. Down 10%. That's a normal day for me. It happens. It happens. The SoFi full porters, which I know some of you guys are in the chat, it's just a bad day. But how do you go out from watching that interview that he just did with KBW and you hear his plans for the future and you go, no, I don't align with that future. Or no, this October CPI report does not allow for that future to exist. Yeah, right. I've sold stuff down 60%. It's never too late to cut a loser. And you know what? The second you cut it, it feels so good. What a you know how good it feels to not have a portfolio built on crap that you don't like? Let it all go, guys. Days like today should scare you straight. This is like the market taking you to prison for a day to meet the people who are actually still holding on to Peloton and skills and all of these things. You want to be like them? You want to be like them? You better go buy some quality right now. And then all right, get back to school, kid. That's what's happening. This is a little scare you straight. They're shaking your shoulders. It's a day like today that makes you clean your portfolio. Sometimes we got to go through. We got to clean the portfolio from time to time. BM&R is well. Okay. BM&R is true crud in my portfolio. They don't have a business. Okay, I'm fully aware. But guys, it's not the same. Okay, the BM&R is different. Whenever you see Cash App with 58 million monthly active users just to allow people to pay with stablecoins, it's like everything we're seeing is going in the Ethereum direction. I don't know. Yeah, we buy Ethereum. That's their business model. Oh, people do this too. People do this way too often, where they'll buy something and then it starts to turn negative. And they're like, okay, the trade didn't work, but maybe next week it'll be good. Like they just turn a trade into a long-term investment because they wanted to play earnings. They didn't even lose big. They might be down 0.5%. They're like, oh no, I got to save this, $200. Who cares? Hold on to stuff that you like. I'm still in BMNR. I do like Ethereum. I don't care what the market says. I'm so bullish on artificial intelligence and blockchain. I do think that those will be the two biggest products, and then all the secondary products that will come out of that, microtransactions, fully self-driving cars, robotics, all of these things that are going to be secondary and tertiary benefits to those two main plays. So I continue to be a fan of BMNR. I continue to be a fan of NVIDIA. I'm not changing out of it. Tokenization completely. You do not get Jamie Dimon, Larry Fink, like all of these extremely big names. Vlad Tenev, who's predicted every single change in financial services. All of them are saying tokenization is real. You know? Okay. PayPal is strong at these levels. What is PayPal doing at a time like today? Is this being treated? Oh, no, it's 65. That is crazy, eh? What percentage of their stock are they buying back at these levels? What does that even look like? Because I know that they recently added a dividend. I haven't been able to still look at their quarter yet, so I don't know. Did they lower their buyback to add that dividend, or did they just add a dividend? How did that end up working? Let me take a look here. Where is repurchase of common shares? Repurchase of common shares was 1.5 billion last quarter. Not bad. And then let's see, total shareholder yield. I also want to see that total shareholder yield. My gosh, man, that is insane. Dude, I'm not a shareholder of PayPal right now. Okay. But they have a shareholder yield right now, as of today, of 11%. That is so insane. Here, wait, let's chart this really quick. We'll add, shareholder yield. And then we'll look at that for PayPal. I just want to see. I don't know if, what's going on here? Quarterly. There we go. I don't know if this is going to turn out in my favor, but let's say Altria. Where does Altria show up? Can I not see a... Why does it say 0.1% now for shareholder yield? That doesn't make any sense. What is going on? Why is this broken? Did I switch this wrong somehow? What did I do wrong? I don't know. Okay, we'll just look at it individually then. Shareholder yield of 11%. If we look to Altria, MO, we'll take a look at their shareholder yield. I want to see if these types of names, 1%. Let's see, what's Enbridge? Enbridge shareholder yield. Like, are they actually 5.5%? What's another name? Like, that is insane. 11%. I don't know if there's many companies that are higher than that. The market is red seemingly because the government did not put out. Here, we can watch this video together. It's only 35 seconds. Here.
Shutdown could end up decreasing fourth quarter economic growth by 2 whole percentage points. The Democrat shutdown made it extraordinarily difficult for economists, investors, and policymakers at the Federal Reserve to receive critical government data. The Democrats may have permanently damaged the federal statistical system, with October CPI and jobs reports likely never being released. And all of that economic data released will be permanently impaired, leaving our policymakers at the Fed flying blind at a critical period.
So people are worried about the Fed, obviously, as she said, flying blind. And that has drastically lowered the chances of a Fed rate cut prediction. If we take a look at the Fed Watch tool right now, that's sitting at 50.4%. It's actually gone up since we showed it at the beginning of the stream. The chance of a rate cut, but roughly 50-50 chance of a 25 basis point cut for December 10th. A shareholder yield is a dividend, buyback, and debt paydown put together. So those three. Sorry, just because we were talking about that a second ago. The Fed has been flying blind since 2008. All right. The fear and greed index is, I think we're sitting just at extreme fear, 25. Let me check that for sure, though. We are sitting at 23 right now, extreme fear. You can see this here. Oh, I don't want a new TV for my live television. I don't care. But yeah, greed 1 year ago. 1 week ago, we got 18. That's actually crazy. I didn't know that we got that low last week. Now at 23. But we're in extreme fear for SOFI stock today. That's for sure. It's usually the opposite, right? Usually whenever you see extreme fear, you buy when others are fearful and you sell when others are greedy. But yeah. ServiceNow video, Tanner, probably not. Honestly, I like ServiceNow. No one cares about ServiceNow. Very weird, but yeah. No crying in the casino. All right, I'll shut up. Meta's look like it's bottomed. I do think there's been a lot of support at the $600 range. It does look to be that way. It can obviously go lower. Obviously. We end up seeing data that, there's more layoffs and companies are slowing down their advertising spend. I mean, you just need something fundamentally to hit their Q4 and to potentially suggest that holiday spend is not going to be as much as it was in previous years. And boy, oh boy, do we go lower. Well, I say that, I am actively buying Meta. So, yeah. Nope, I do not use margin. No, I don't really have any cash right now. I had to trim NVIDIA today to buy into Nebius. A very, very small trim like that. If you look at the pie, it's hard to do my hands like that, but my position kind of went like this. I got to play Stardew Valley tonight to relax. Yeah, I mean, you shouldn't be watching right now. You need to click away. You're doing more damage to yourself. Well, actually, I'd like to think I'm not fear mongering. I like to stay calm, but you are actively seeking out more and more information. You're going to be fine. This dip is my fault. I discussed selling 9% of my SOFI yesterday. Yeah, I mean, it does sound like your fault. Okay, is this true? Or are you lying to me? Like, did Granny actually get included, or are you just saying like that it should be? It is. It is. He read my tweet. I said I would get it in there, ladies and gentlemen. You're so right. Oh my God, look at it right at the top of the freaking list. $98 million purchase by the great and powerful Tom Lee. This is Tom Lee's ETF called the Granny Shots ETF. Means that there's two or more, I forget what he calls it, like large structural changes that are going to benefit its business over time. They're doing multiple different things. The company always gets rebalanced, but nearly $100 million worth of a bet on SoFi here. Look at that. What a slide. When was this? Immediately he buys it. It's down 11%. That sucks. I mean, that sucks to suck. Still, though, this must have been not new news. I must have found out about this recently because it's the highest weighting in his portfolio, which can't happen because he does equal weighting and rebalances, and we're down 11%, which means that it shouldn't be at the top of the list. It should be at the bottom. So this is like week old news. It must be. It's not insanely positive. It's just somebody with a very, very popular audience. I don't think that there's a single person that's more popular than Tom Lee in financial services right now or financial media. He's now bought into this company, and there's an additional institution that's purchased $98 million worth of stock. So I think it's good for the brand name. I think it's good for the stock. Yeah, he's been into some companies and then trimmed them later. He was a PayPal shareholder and then ended up trimming it. But yeah. Okay, let's see. He saw your tweet and bought right away. No. I DM'd Tom Lee. I'm not taking credit for this. He bought it on his own. I'm not taking credit for this. But I'll read you the exact tweet that I sent to Tom Lee. I hate the fact that they changed this they created this stupid chat thing. I'll check it on my phone. It's not broken on my phone. They are just actively working on X to break it. Okay. Hold on. What's his name? It's not searching under Tom Lee. It's something like Thomas. But yeah, still down 11.4%. It's not enough news. When was this found out? Yeah, it's like Thomas, not a drummer, or something like this. Okay. Oh, it's at Fundstrat. Okay. Right there. Okay, I'll read it to you guys. Actually, maybe I won't. Maybe I shouldn't have shown that because I'm so cringy here. Hi, Tom. My name's Tanner. I'm a retail investor and analyst on YouTube where I cover fintech and tech stock. I suck. I wanted to reach out with a quick question. Have you looked into SOFI following the most recent quarter? From my perspective, they seem to be at an inflection point with strong institutional demand for their loans, which is fueling their ability to advertise aggressively for high quality customers while steadily improving margins over time. Look at me. Would love to hear your thoughts if you've taken a look. I know you're bullish on tech and financials right now. SOFI is heavily invested in AI and crypto right now. Seems like a name that would fit into your Granny Shots ETF. All right. I messaged him. It did fit into his ETF. I knew it would. Okay. But, sir, this is a Wendy's. May I speak to Wendy, please? Okay. I want to know when this news was found out. When did we know of this news? I can't believe Michael Burry closing down Scion Asset Management saying, hey, guys, I'm, terminating this. We're no longer doing this. And then the market crashed. Like his shorts were holding up the market. You know? Do you own Nubank? Yes, I love Nubank. I've been buying since $3.80. Been a huge fan of New. DDI posted about 10 minutes ago. I think I have that guy blocked. No, I'm kidding. Let me let's see here. SoFi just got added to Tom Lee's Granny Shots ETF. The screen shot below is from Fundstrat website, Granny Holdings. Let's go. Yep. That's positive. I like that. Okay. Ladies and gentlemen, I'll give you guys a 30-minute break. The market is, as this person says, dead and buried. Yeah, is Michael Burry doing this? You'll be okay. Calm down. Markets are fine. We'll be okay. Thank you all so much for watching. If you guys want these market monitor shows, let me know in the comments down below. DM me, whatever. Maybe we'll start doing 2 o'clock, 2 to 3 type shows just to sort of get in on some of the market action midstream or midday. Really do appreciate it. Subscribe down below if you want to see more of this content. Bye for now.